Hello, YouTube. The bears have flexed, and we want to ask ourselves how low we need to go before we find support because we are approaching the May low at 380.54, and we did actually poke below it. This is going to be a very key area because it is also a monthly level. If we look here to the SPY on the 1-day chart, we also note that we have two dominant trends here. The first one being red or resistance, and the second one being green or support. And where are we right now? We are right on that green line, which means we are right on daily support. This is going to be very, very important. When two green lines meet, it means that keyword being should be strong support. If it is or isn't, that is going to be very important because now we have two consecutive daily closes below the 50 DMA. That usually means there is potential for a trend change. The one thing that is missing is volume. We don't quite have a flush of volume or capitulation quite yet. There are multiple days of elevated volume, but not enough to say that we are seeing that capitulation quite yet. So if this is not support right here, right now, where is it going to come? That is the purpose for today's video. As we're getting started, I'm going to ask you for a huge favor. If you could please smash that thumbs up, it'll mean a lot to me personally. And we also have that Santa special on right now. So even if Jerome is not Santa this year, Justin is trying to provide discounts up to 44% off. If you go to thealgo.com, you can trade with me to see exactly how I take all these notes on YouTube and formulate them into a plan to actually trade and make money. All right, so a few things to talk about here. Let's talk about the actual pattern first. So here we have 380.54, which is going to be a monthly area. That is going to be very important. Our low last week, 381.04, which means we now have a lower low and a lower high again. And we've rejected here off the 50 MA, and we have increased volume as of last week. This is flashing bear signals. The bearish signals continue to flash. And I want to talk about the first half of the week versus the second half of the week because I think it's really important to understand that we have a key data point coming in just before Christmas. Why? Well, Friday's the last session. Christmas Eve is going to be on Saturday. And then we got Christmas Day on Sunday. And maybe Santa Claus is waiting until Friday to come to town. We've got core PCE coming in on Friday. And that is expected to come in here at 0.2%. But let me actually just expand this because there is also a second data point or core PCE, which I spent a lot of time this weekend talking about, which comes in hot on Friday. And we're looking for it to come down to 4.7 from 5.0. I think that would be received very positively by the bulls. We talked about it on the weekend. All right, so that's where we said. We're looking here at SPY, and if we're going to bounce, like I would expect to find buyers here. We have not found them yet. So second chart to look at now is going to be QQQ, and that's just because, well, this is the area that is still oversold, and growth is currently getting repriced because growth is very growth is very related to treasury yields because generally growth companies are unprofitable. And when the cost of doing business or interest goes up, it is harder for these tech companies to actually remain competitive. All right. So with that out of the way, let's look and see what happened to QQQ because ironically, it's also coming back to its June low, not even to its May low. If QQQ was still tracking, we'd be here at about 280. We're not. We're lower. We're down here in 260. So the area we're looking at specifically is 268.28. Our low so far this week, 268.49. So we saved it by, actually, no, sorry, we lost it because it's 269 versus 268. So when we look here, well, dominant red pattern, right? Lots more pattern here on the bull side, on the bear side, sorry, for the head and shoulders, much more visible on the monthly chart than it is for the pattern with less time on it or the bull pattern. What's really interesting here too is that if we go to QQQ on the daily chart, let's actually delete all that extra stuff I deleted here because I like having my charts nice and clean. I like naked charting. And when in doubt, we look at the longer pattern, more time for the bear going back to January. Yeah, it's more dominant. It's more important, more significant. Looking here at QQQ, well, S&P's now got two daily closes below the 50, but QQQ has notched three below the 50 DMA. It's also now below the 200 weekly and the 50 monthly, and I just know that because I've added these areas to the chart here. So this dominant head and shoulders pattern is on S&P. It's on QQQ. And if we now look over here to our weekly chart again on QQQ, what do we know? Well, let's delete everything. We're set. Not currently, but we're set for two consecutive weekly closes below this 50. That is not good. It is not bullish. If we also look here to our monthly, here is where the pattern gets much more obvious for an area for us to bounce here, because as we look here to our monthly chart, we've seen a multiple dip buying off the 50. So massive wick, and now we are back below. And we have a higher high and a higher low, which means there is even potential for us to put in a bearish engulfing monthly pattern if we continue to slide. So when I'm looking here to the chart, I'm trying to ask myself where we would actually find support. Because if we look here to the same chart for SPY on the monthly, whoa, well, it also seems like there is that head and shoulders forming, but there's nothing here that confirms it quite yet. We also have that higher high and a higher low. And if we take out this low at 368, we're basically slide another 10 points. Bearish engulfing monthly, bearish engulfing on the weekly last week, and then ironically also a bearish engulfing on the yearly. Whoa, is this the year of the bear? Well, it appears like it is. We also have the volume, which is actually ramping up here. So I'd say the onus is on the bulls to start fixing these charts. Otherwise, when in doubt, zoom out, look at the higher time frames, and recognize that we're currently facing an uphill battle. And the question for us this week is whether or not we're going to be starting the incredible slide. Meaning, are we going to go into the nastiest drop? Are we going to have the Grinch showing up this year? I don't know. If you guys wouldn't mind, please smashing that thumbs up if you're still watching. I would really appreciate it. We talked about this on the weekend, and to give you a nice clean chart with a single line, we're going to smooth it out to give you the historical SPX performance going back 20 years. And normally, Santa Claus comes to town in the second half of the month, but notably also in the last final sessions, meaning the last 5. So if we're going to be tracking, it's time to start advancing like right here, right now. If not, the bear appears like he's ready, he's out of hibernation, and he wants to stomp us going into the end of the year. I think it's really going to all come down to that PCE number on Friday, which is why I'm really paying close attention to the weekly chart. And we'll look at the daily in a moment, but I think the story is just a little bit easier when we look at a high time frame here. So when we look back to the image that we had on the weekend review, I was talking about how we have a bearish engulfing pattern here going back to May. It's also the low that we're trying to bounce off right now. The following week, higher high, higher low, which means we actually got a huge bounce that week. So far this week, we had a failed breakdown for part of the day, which means we fell below 381. We did recoup it, but then we just couldn't hold it. They pumped the close, but as of right now, these just look like soft dead cat bounces. So we go down, dead cat bounce, go down, dead cat bounce, go down, dead cat bounce. And that's obvious from the lower highs and also the lower lows. It's not really looking all that constructive right now, even though we are in oversold territory. So the first thing the bulls wanted to defend was 380. Well, we closed above it by 2 cents. Yuck. So for any hope for us to go higher, we have to get a daily close now back above 381. Otherwise, I think it's going to be a really tough battle. We got multiple days below the 50 DMA now on QQQ and also on SPY. And if we're going to make upside progress towards filling these gaps, we pretty much have to start it now. A few more quick headlines for us to go through, which is going to provide some headwinds going into the end of the year. Real money funds dumping $100 billion of stocks on rebalancing. Stock sales break 2022 rebalancing trend that stoked rallies. So there you go, the Grinch, right? The Grinch is here. And then in addition to that, the CNBC Millionaire Survey for December of 2022 tells us that stocks rank as the biggest threat to their wealth. And what are they doing? Well, they say few plan to invest in stocks in 2023. Interesting. Investors say they have more cash in their portfolio than last year. Interesting. So it looks like people are bargain hunting right now. And then we had the big bear, Mr. Mike Wilson, over at Morgan Stanley, telling us that stock declines may be much worse than investors expect. How bad? 2008, baby. Boop. The comparison that I keep pointing back to. So is this a coincidence? Is it going to happen? Well, let's just pay attention to the chart and the data as it comes in. So at a very high level, that's what we're looking for. We're looking for some relief at some moment in time. We've now notched 4 back-to-back red days. We've done more before, but usually after 4 or 5, we start getting oversold. Here we got like 6 or whatever, 1, 2, 3, 4, 5, 6. With if we go to hollow candles, we'll see the actual story. 1, 2, 3, 4, 5. Here we got 1, 2, 3, 4, 5. So maybe one more red tomorrow. After that, the odds, again, keyword being the odds, are that we're due for a bounce. But there's a lot of work for the bulls to do to start fixing these charts. Last thing for us to look at here is going to be why there might be some relief. And again, I just told you, we need to get back above 381 on SPY for there to be any upside. We also have to battle with this key dominant downtrend here. Here we're looking at the E-mini futures chart. And again, ignore all the lines. That's just for me personally. We're trending down, which means we're trending down. But I'll give you the glimmer of hope for the bulls. And again, I'm currently bearish. So I tried a bullish trade today. I got stopped out. That's okay. We're allowed to be wrong. We don't want to stay wrong. Here's the reason why I'm a little bit optimistic going into tomorrow. And there's no confirmation. Let's be real. There's no confirmation. But if we're going to recoup back above 381 or the same low here on ES at about 38.55, let's look to our volume. So going back to our, we're going up. We got biggest green bar here is green. Let me actually just delete everything and I'll just highlight this really briefly here. So big green, big green, big green, big green, big green, which means the biggest bars on the day are green. Then we got red, 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 and then we got green and green, which means at least for the last 2 days, the bulls are enthusiastic. Is it holding up? Well, not really, because this last green buy led to a lower low and a lower high. So if the bulls are going to show up, they pretty much have to do it right now. Post OPEX and all this stuff rolling over, we need to see these bulls show up to start to get a big bounce or any kind of bounce, right? Really, off of this double green area, double support, because we're below a lot of key areas. With that said, I'm going to defer to the weekend deep dive where you can get my deeper thoughts in terms of where I think we could go for this week. And I thank you so much for watching. As always, you can join us at thealgo.com for up to 44% off and to trade with me, Justin from YouTube, to see how I'm taking these notes to formulate a plan and try to conquer the market. Thank you so much for watching. I look forward to seeing you tomorrow.